Welcome back. Let's look at some of the markets and how they're performing. Asian shares crept higher after a weaker than expected jobs report out of the United States on Friday. However, concerns remain about the outcome of the recent high-profile talks between the United States and China over trade and tariffs. Tokyo stocks closed marginally lower in sluggish trade earlier today as investors stayed on the sidelines in the middle of corporate results seasons, with exporters facing moderate pressure. They faced moderate pressure on the stronger yen. The benchmark Nikkei down just a fraction though. Hong Kong stocks were in positive territory. The Hang Seng index closed up 0.5%. In China, sentiment was positive, with the Shanghai Composite adding 1.5%. Okay, this follows the close on Wall Street on Friday. Those U.S. markets today have not opened yet. The three major U.S. stock indices rose more than 1% on Friday. This was after the release of weaker than expected U.S. wage growth, which is surprising that it added to the markets, but it did help to calm investor fears about rising interest rates and inflation. Apple hit a record high after Warren Buffett's Berkshire Hathaway disclosed it had raised its stake in the iPhone maker. The U.S. also recorded an unemployment rate of 3.9%, which suggests that the economy is nearing full employment levels. The Dow Jones Industrial rose 1.3%, the S&P 500 1.28%, and the Nasdaq Composite adding 1.7%. So last week, lots of movements in the dollar, lots of global action. Nompu Siziba live for us from the JSE. Over to you, Nompu.
Thanks very much, Francis. Yes, like you say, last week there were two key things that the markets were focused on. That US jobs number for April, which came in much better, came in not so well as expected, pardon the English, but I think the expectation was 192,000 jobs, but only 164,000 jobs were created. But having said that, the unemployment rate still went to 3.9% from 4.1%, which is really good going. I mean, wouldn't it be great if South Africa had that level of unemployment? So things looking good in the US economy. In the long term, markets anticipating that those interest rates are going to come, but in the short term, not an expectation of the central bank there in the United States going hard and fast on interest rates. And that's why we're seeing markets rebounding, breathing a little bit. In terms of the all-share index at the moment, we're seeing that up in positive territory. It's currently being led by financial counters. Mining counters not doing so fab, and I think that's really a product of the dollar having strengthened. You know that when commodities are priced in dollars, they're denominated in dollars. When the dollar appreciates, they become a bit more expensive and therefore less attractive. And so we see them not doing so well at the moment. And then the local currency, that's not doing so well today. I think that's pretty much in line with emerging market currencies. And this is due to dollar strength. So we have to see what happens tomorrow. It might swing the other way. And in company news, we hear that, we see that Sibanye-Stillwater, after that terrible incident last week where 7 miners lost their lives, that particular stock still not doing very well at all. It was down by as much as 7% earlier in the session. Let's take a look at the indicators. Well, I'm joined by Bright Kumalo. He's a portfolio manager at Vestach. Thanks for joining us as always, Bright.
Yes, lovely to be here, Nompu.
Good stuff. As I mentioned last week, markets were focused on those jobs numbers. They were also focused on the high-level discussions between the US and China around trade. How is all that feeding into global and local markets today?
Yeah, it seems the trade wars are behind us. Well, talking market-wise, not realistically. And like you were saying, the US dollar against major currencies is strengthening. I guess the bad news here, which is the weaker jobs number, but the good news is that the unemployment rate of 3.9% is the lowest since I think 2006. It's really fantastic for that economy, which again that's why people are actually positive about America, saying that the economy is growing stronger and faster. That's why the dollar is strengthening against these major currencies. And that has trickled down basically to most of our markets. We saw Asia closing up. We're up about 0.5% here in South Africa. So we like that trickle down for green markets. We haven't seen these in a while. Yeah, so that's what's going on with markets generally.
So now, as I mentioned about dollar strength, it tends to be negative for commodities. But in the case of crude oil, that's, that price is surging ahead. It's breached $75 a barrel. Just speak to the factors that are kind of elevating this price and whether you think it can remain at this level.
So that's, a counterintuitive sort of thing that's going on there, because we're talking about supply that's at all-time highs. We're seeing, barrels, some of them stored in the ocean. The oil rig count, according to Friday's report by Goldman Sachs, it's at all-time highs. But the big story here is that we're lacking about 2 million per month, 2 million barrels per month that comes from Iran, because that has come over to a shroud again, because Trump doesn't like Iran, and they think those sanctions are going to be reimposed on Iran. So that's the big problem there. So that's what's basically pushing the price in the interim, because that supply now is stuck in Iran. It can't go out.
And then here at home, we know that you love this stock. You never hide that. MTN, it's released its first quarter update on its Nigerian operations. It's talking about a positive momentum in that economy, and the company seems to be keeping on the right side of the regulator, which stumped it with a $1 million fine not that long ago. The numbers that they're talking about, service revenue in Naira terms is up 14.5%. And on the face of it, this looks amazing. Data revenue up 73% year on year. So this quarter, that is January to the end of March, compared to the previous quarter last year. Your thoughts on this?
Yes, I have no emotions to any stock. Let's just get that out of the way. I'm very objective, okay. I'd like to think. Yeah, so basically they released their numbers pre-IPO, because they're working on that IPO in Nigeria and in Ghana. So this is the first time we're seeing the numbers as a standalone, from, I would say farm to fork, or what's going on at MTN Nigeria. The business is gaining momentum there. We saw in the last quarter last year, the fourth quarter, we saw 2 million new net adds in terms of subscribers. They added a further 2.3 million now in the first quarter, like you're saying. So they've got 54.5 million subscribers there. So it's not very far from the all-time highs in terms of subscribers. But the important thing here is that management, the new management, is focused mostly on capital expenditure, working on the quality, the service, the quality of the network. And by net promoter scores, currently MTN is #1 in Nigeria, the same as here in South Africa, here at home. So that basically means, the data speed, the drop call rates and all that stuff. Basically that's network related. It's #1 there. In terms of the capital expenditure, where is it going exactly? 298 new 3G sites that are being built, 174 4Gs in the top 10 cities there in Nigeria. Very good for the company, because it means, the thing about the network is if you use it and it actually works when you need it, it sells itself. You don't want to have a network that doesn't work, and by that customers will automatically move to a better network. So
capital expenditure sounds good. They're investing in the right things. The revenues sound amazing, but are they making a profit?
Yes, I mean they are making some monies there, and we're seeing that actually they've so much so that they've improved their margins to 41.8%. So that's an improvement of about 332 basis points. So I mean, it's very hard to operate in these African countries. There's lots of regulatory risk. And as a result, the reason why margins are so high, because you're getting paid for taking that extra risk.
Indeed. And then, as I mentioned in the introduction, Sibanye, that stock down by 7%. Do you think what has transpired last week with all those lives lost, and of course it's not the first time, do you think it will have a long-term negative impact on the stock?
You know, unfortunately, losing lives is a very sensitive issue, especially for these mining companies where you go down 4 kilometers into the wilderness. It's very sad that 7 lives have been lost as a result of this 2.2 tremor or earthquake. But I was listening to Peter Bailey earlier. It's basically insinuating that it could have been gross negligence, but they're waiting for the report to come out.
Peter Bailey is a member of a union, isn't he?
Yes. And this is basically, the thing is that the management here of these mining companies, you know, they're stuck between a rock and a hard place. You've got the people that work for the mines, and you've got automation on the other hand, and you have to strike the perfect balance. But this is where automation would be very useful, but it's very unfortunate that it's inherent in the business of mining that lives will be lost at some point.
Yeah, it's the inherent risk, which is quite sad. And unfortunately, we've run out of time. We've only got a few seconds, but we're going to leave it there. Thank you so much for your time. As always, Bright Khumalo, Portfolio Manager at Vestact. After a short break, Francis has more business news for you.